Your Pinescript strategy crushes it on Bitcoin. 80% win rate. Beautiful equity curve. You apply the exact same code to Apple stock, and suddenly you're losing money. What's happening? US equities aren't crypto. They don't trade 24/7. They react to institutional money flow. They behave completely differently during market open versus market close. And if your Pinescript doesn't account for this, your backtest means nothing. Today, I'm breaking down exactly how US stocks and ETFs behave differently, why most strategies fail on them, and how to build Pinescript code that actually works for NYSE and NASDAQ trading. Here's what makes US markets unique. First, fixed trading hours. Markets open at 9:30 a.m. Eastern, close at 4 p.m. That's when 80% of volume happens. Your strategy running signals at 2 a.m.? Meaningless. Second, the open is violent. In the first 30 minutes, volatility spikes 3 to 5 times normal levels. Institutional orders flood in, gap fills happen, retail traders get wrecked. If your strategy doesn't filter out this chaos, you're trading noise, not signals. Third, ETF correlations. When SPY moves, individual stocks follow. QQQ dominates tech stocks. If you're not checking broader market context through ETF behavior, you're missing the macro picture that drives price. Fourth, after hours means nothing for most traders. Pre-market and after hours have terrible liquidity. Your backtest might show signals there, but you can't execute them at those prices in reality. Professional traders don't look at one time frame, they use multiple. Here's how it works in practice. Daily chart shows you the trend. Is the stock in an uptrend, downtrend, or consolidating? This is your directional filter. Don't fight it. 1 hour chart shows you market structure. Support and resistance levels, where institutions are defending price. This is your context layer. 5-minute chart shows you entry timing. When RSI gets oversold at support during an uptrend, that's your signal. Not before all three align. In Pinescript version 6, you build this using request security function. It pulls data from higher timeframes. But here's the critical mistake everyone makes. They use incomplete candle data. You must use bar merge look ahead off to ensure you're only reading closed confirmed candles. Otherwise, your backtest looks amazing because it's cheating, using future data that doesn't exist in real trading. For US stocks and ETFs, session filtering isn't optional. Look at this code structure. We're defining regular trading hours, 9:30 to 4 p.m. Eastern. Then we're adding a 30-minute buffer after open to avoid the volatility chaos. Our strategy only generates signals between 10 a.m. and 3:30 p.m. when markets are stable. Watch what happens to results. Same strategy, same indicators. Left side, no session filter, taking every signal including market open. Win rate, 52%. Right side, session filtered, avoiding the noise. Win rate, 68%. Same code. Massive performance difference just from respecting market hours. Building this manually? Here's the reality. You open Pinescript editor, write indicator logic, add session detection code, implement multi-timeframe confirmation, fix syntax errors, debug for 2 hours. Finally compile, test, realize you need ATR-based stops, rewrite risk management, test again, find a logical error, start over. I've done this hundreds of times. A solid US equity strategy takes 4 to 6 hours to code properly, assuming you already know Pinescript well. Or you describe what you need. Write a Pinescript version 6 strategy with EMA crossover, 9/21 EMA, plus RSI confirmation, plus ATR-based exits, optimized for positive backtest results with following rules. Hit generate. Get complete structured Pinescript version 6 code in 30 seconds. Already includes session logic, multi-timeframe confirmation, risk management. The code is perfect. You spend 10 minutes refining entry logic instead of 4 hours building from scratch. That's the difference. Let me show you real results. We built a Pinescript version 6 strategy with EMA crossover, RSI confirmation, and ATR-based exits, optimized for positive backtest results. tested on Apple, Tesla, and SPY across 6 months of data. This isn't about magic indicators, it's about context. The same strategy can behave very differently depending on when it trades. Once you respect US market hours, your backtest starts reflecting reality instead of noise. So overall, US stocks and ETFs demand different strategy logic than crypto or Forex. Session filtering removes noise. Multi-timeframe confirmation aligns you with institutional flow. ATR-based stops adapt to each stock's volatility. Stop fighting the market structure. Build strategies that work with it. If you're spending hours debugging Pinescript instead of testing trading ideas, you're doing it backwards. Use PineGen AI to generate session-aware, multi-timeframe strategies in minutes, not hours. Focus on what matters: market analysis and risk management. Let AI handle the code structure. Link in description. Build your first US equity strategy today. Stop losing to market structure. Start trading with it.